Hi, I'm Ross Buckley from UNSW. The two research projects I currently lead, funded by CIFA, deal with the effective regulation of digital financial services delivered over mobile phones in developing countries and in Australia. This research matters because the effective regulation of digital financial services has proven to be difficult. In developing countries, the potential of digital financial services to promote people's productivity and alleviate poverty is extraordinary, and has attracted the involvement of many major organisations, including our co-partner in this project, the United Nations Capital Development Fund. These organisations are engaged because they see the potential of DFS to lift people out of poverty. By way of example, we have done a lot of work this year in East Timor. Our study suggests that many rural residents in East Timor have to take 2 days off work, travel long distances by bus, and then stay overnight, simply to get to a bank branch. The delivery of financial services over a mobile phone means that person can spend those 2 days working. Digital financial services also allow governments to distribute welfare payments without what is euphemistically termed leakage. For instance, in India, in the parts of the country without such financial services, up to 45% of government payments go missing. So the upside of these services is massive. The difficulty is that if regulated like traditional banking, they are not profitable. The amounts are too small, the profit margins too thin to meet the cost of prudential regulation. So our task is to analyse and identify each risk in the delivery of such services and then propose the minimum amount of regulation necessary to deal properly with that risk. In many countries, these services are regulated by beginning with the full suite of banking regulation and then exempting services from compliance with certain rules. We propose a completely different approach, by which one starts with a blank slate, works out what the risks really are, because often in a systemic sense they are pretty minimal, and then one deals with each identified risk. Our work has had considerable impact. Our research on using trusts to protect customer funds has been widely used by the World Bank in a range of African countries and has been directly implemented by the central banks in Fiji and Timor-Leste. Many of our other regulatory suggestions have been adopted by Timor-Leste and by Malawi, being two countries in which we have conducted extensive fieldwork. This year we have undertaken a major project on how best to regulate digital financial service agents, because agents are key. Many DFS schemes are led by telecommunications companies, not banks, and agents are the interface between those companies and their customers. These agents are typically local shopkeepers, and they provide the means for customers to deposit or withdraw cash from their mobile phone accounts. Regulating typically unsophisticated people in remote areas appropriately is a very challenging undertaking. But we have recently completed a major study which is in the process of being published. We have also extended our work on protecting customer funds from common law jurisdictions into civil law jurisdictions, where the absence of the common law trust means the challenge is very much greater. This major piece of work is also complete and is also in the process of being published. Our second CIFA project involves Australia, and particularly the regulation of stored value financial products in Australia, such as the Opal card, Myki card, and prepaid debit cards. To date, these products have not been particularly important in our financial landscape, and so mostly have been regulated by a process of exemptions, by which, if the product meets certain criteria, the relevant authority exempts it from having to comply with other onerous requirements. Such an approach was understandable before the fintech revolution, but it has now reached its use-by date. The current regulatory approach means many potential market entrants are discouraged and don't enter the Australian market when they learn that if their product goes to scale, they will have to register as and be licensed as a bank. That is regulatory overkill if the new entrant is simply proposing to provide a more efficient payments mechanism. I see our work in this regard very much as a regulatory complement to that of the new fintech hub in Sydney named Stone & Chalk. The entrepreneurs in that hub are focused on cutting-edge technological innovations. Our work focuses on providing a regulatory environment that will support those technological innovations and allow them to bring real benefits to Australian consumers and business.